Hello, everyone. Matt Clark, research analyst for Money and Markets, here with your latest Bull and the Bear podcast. Now, I want to make sure that you are checking out our website, moneyandmarkets.com, every day for safe and profitable investment information. Just head over to moneyandmarkets.com. You'll see Chief Investment Strategist Adam Odell, Charles Sizemore, and myself, as well as the rest of our team, as we work hard every day to make sure that you have the best information to bolster your portfolio. When you check out the website, make sure to sign up for our daily free e-letter. You'll get all that safe and profitable information, investment information in your inbox each and every day for free. So make sure you head over to moneymarkets.com and check that out. Now, on with today's podcast. Each and every year, if you're like me, millions of others, we go through the same routine on New Year's Day. We set our resolutions for the year, basically what we want to accomplish or what we want to try or what we want to try to achieve, things like that. That's what a resolution is. I resolve to do this. I'm going to do this. I'm going to do that. I'm not going to do this. I'm not going to do that. A majority of us have basically, there's two resolutions that we all basically kind of circle around. And that is one, to improve our finances. We always want to be richer. We want to save more money. We maybe want to save for a vacation or just improve our overall financial situation. The second is you want to lose weight or be healthier. I want to lose weight because I have some extra pounds and I'm feeling a little chubby, or I want to eat healthier or whatever. And coincidentally, those are also the two hardest resolutions to fulfill. There are a lot of temptations, which makes losing weight and being healthy very difficult. There's a lot of temptations out there. There's fast food. There's just tons of things. And if you are, we're in the midst of a pandemic, so getting out and doing things has become a little shaky. So being more active has actually become somewhat strange. And you never really know what can happen from one day to the next when it comes to your finances. You could have a good day on the market. You could have a bad day on the market. It happens all the time. You could have an emergency that drains your savings. There's a lot of things that can happen on your finances. So those are two really very hard resolutions to maintain. Now, what if I told you that as a smart investor, you can actually achieve one of those because of the other? Sounds kind of exciting, right? Well, I have found a company that specializes in providing weight loss products and management. And it's one that I think is going to outperform the broader market by at least 3 times over the next 12 to 24 months. And I'll get to that here in a second. But first, I want to talk about kind of the weight loss market in the U.S. It's going to provide a little insight and some context into why I think this company is going to take off this year. Now, millions of Americans like me, like some of you maybe, are on a mission each and every year to watch your diet. Whether you're watching your diet so you can bulk up, or you're watching your diet so that you can slim down. Maybe you have a size in mind. You want to fit into that, summer's around the corner. You want to fit into that swimsuit this year. Whatever the case may be. A recent study by Statista, which is a data firm, said that more Americans watch their diet in order to lose weight than really for any other reason. There are others on there: cholesterol level, blood sugar level. You want to maintain your weight. Maybe you've got some hypertension, some other health issues. You have diabetes, salt intake. There's a lot of different reasons as to why people have wanted to watch their diet. And I'm in the same boat. I want to watch my diet so that I can lose some of those unwanted pounds and be a little healthier as I get older. In fact, 27% of Americans said they have a New Year's resolution to stick to a diet because they are motivated to improve their long-term health. 22% said it was because the changes would make sense for their lifestyle. So there's obviously a health reason behind anything like that whenever you talk about a diet. But diets take time, they take preparation, and they take help. You really can't, it's very hard to do it by yourself. So whether you join a gym or subscribe to a weight loss program or buy supplements or whatever, the supplements like shakes or nutrition bars or whatever, odds are you are adding something to the weight loss equation. You're not just doing your normal thing. You are adding something to it. Now, U.S. weight loss market hit a value of about $79 billion back in 2019. And it's expected to drop by about 9% to $71 billion in 2020 because of the coronavirus pandemic. However, I think this trend is going to reverse itself quickly in 2021. And even beyond that, because I think there's going to be a more hyper focus on health, especially because of the COVID-19 pandemic. We are going to want to be more healthy because we've really kind of been scared by this pandemic. I think the market's going to rebound to close to $80 billion by the end of this year and actually continue to rise even higher. And the company I found is actually perfectly positioned to capitalize on that rising trend. The company I'm referring to is Medifast Incorporated. It trades on the New York Stock Exchange under MED. Very simple to learn. It's a company that manufactures and distributes weight loss and healthy living products. They make nutritional bars, cereals, health drinks, smoothies, even soups and baked goods that are meant to be healthy through their Medifast, Optavia, and Thrive brands, amongst many others. And they're all aimed at providing healthy alternatives to regular foods. And the company also provides weight loss management. So if you're familiar with some of their competitors like Jenny Craig or Weight Watchers, Medifast does kind of the same thing. And Medifast has actually been on the rise. And for the 9 months ending September 30th, of 2019, the company registered a total revenue of $688.8 million. Now, for the same period in 2020, those sales grew 22% to $840.5 million. Now, their 2020 quarterly sales are on track to potentially top the $1 billion mark, even in the middle of a pandemic after weight loss spending was actually down. Medifast has a one-year annual earnings per share growth rate of around 32%. Their 3-year annual EPS growth rate is 63%. And the company's stock has followed suit. Coming off its March 2020 lows of around $50 per share, Medifast stock jumped more than 375% to where it's priced today. That is a massive jump. And in the last 12 months, the company's share price has grown more than 148% compared to professional service sector, which has only grown 8.4%. And against the broader market and one of its biggest peers, as I mentioned before, you can also see how strong Medifast is. WW International Incorporated, which trades on the NASDAQ under WW or Weight Watchers, has seen its price share fall by 28.4% in the last 12 months. You can see that in the red line in the graph I'm showing you. The S&P United States Consumer Staples Index, which is the green line, has only grown 4.8%. It's a pretty stark contrast. Now, switching gears, we can look at Chief Investment Strategist Adam Odell's 6-factor green zone ranking system to really validate just how strong Medifast is. It ranks a 97 overall, which puts it in the top 3 percentile of all the stocks that we rank. It also means that we're really strong bullish on the stock, and we see it outperforming the broader market by at least 3 times over the next 12, even 24 months. Medifast ranks 100 on growth as its total revenue, as I talked about before, was $848.5 million in the first 9 months, a 22% jump from the same period in 2019. It also ranks 100 on quality, which is $12 million in debt and operating cash flow of $145 million. That is a nice ratio to be at. It's all not bad to hold a little debt, but you want to be able to have enough cash on hand to pay for it in case something happens, and Medifast has plenty of it. And that is great news, and it's a high-quality stock. The company also scores above average in both size and volatility. Its solid uptrend in stock price gives it a rank of 85. Its value is a little low as its price to earnings, price to book, and price to sales ratios are all a little high. But then again, the entire market is at this point. Most of the market is pretty overweight. Medifast is a little frothy, but not too bad. And it's pretty close. Its ratios are pretty close to the personal professional services industry average. So it's not bad. It's just a little high, not too bad. Medifast is on the rise. Its sales came through the coronavirus pandemic with flying colors. And I think it's a trend that's only going to get stronger in 2021. But really, if you want to take advantage of that trend, you need to get in now before it's too late. So I've talked about Medifast. I hope you, if you missed any part of that, you can always rewind and check it out. But make sure you check out our YouTube channel. Head over to youtube.com if you're not already there. Search Money and Markets. Make sure you find the green bull and bear logo. Click on that, subscribe, and get notified each and every time we put out a new video. If you're listening to this on YouTube, maybe you want to listen to it as a podcast on your phone or your tablet or your smart home, you can do that. We are on Apple Music. We are on Google Podcasts, Apple Podcasts, iHeartRadio, Amazon, Spotify, and a wealth of other syndicators out there. Just pick your favorite one. You can find us. Leave us a review and subscribe as well to whatever podcast channel you might be listening to. And if you do have a question, a particular stock, maybe a sector you'd like us to take a look at, make sure you email us at thebullandthebear@moneyandmarkets.com. All coming up later this week, we'll have much more. We'll maybe bring you a couple stock options that you can buy. We think are safe buys for you. We're going to kind of change up the format with myself, Charles, and Adam. Now, each one of us is going to bring you a buy recommendation for our weekend podcast. So make sure you tune in for that. That is coming out this weekend. You'll get a buy recommendation from me. You'll get a buy recommendation from Charles. You get a buy recommendation from Adam. And these are actionable buy items you can take right now. So make sure you tune in and get ready for that. We'll have the week ahead as well. And don't forget about the marijuana market update. If you missed it, you can check it out on our YouTube channel. Just go to youtube.com, check out Money and Markets. So until then, this is Money Markets Research Analyst Matt Clark, your host for the Bull and the Bear podcast, wishing you all safe trading.